We all know that the payments industry is actually $1 trillion market. We all know it can be measured in trillions of dollars. But the question really lays out there kind of who's gonna rule this market. Now, there won't be just one player who is going to rule the entire market, but there will be one player who will be moving throughout this market, meaning from one end to another end, it will always be there. And in this live, I would actually like to take you guys through some of the documents which I really felt like it is interesting, because we will actually look at series of advancement, say for McKinsey reports, that we will actually look from the current aspect and how it evolved from 2015. We'll actually go through their reports 2015, 2016 and understand how these all changed, right? So that really has a lot to do with what is happening as of now, because when it comes to 2020, they kind of address this like global transaction banking, the $1 trillion question. So that really is important to understand who's going to win in that one, right? Because when we come here on this particular document in 2019, it highlights global transaction banking continues to be an attractive business, accounting for 965 billion revenue in 2018. We are not talking about the total turnover, we are talking just about the revenue, right? So that was back in 2018, right? So if we move on way back on to 2015, we can actually see McKinsey is talking about payments. And when they are talking about payments, see the highlighted thing here, towards an internet of value. Now understand these are highlighted in these kind of reports back in 2015, talking about internet of value, which we all know is XRP, right? Now we have the internet of information, we are looking towards the internet of value. So that really is happening. Now if we go through that article and understand things, we'll be able to understand that whatever we are looking at now is almost all the time going against the correspondent banking system, what it is happening and how things are evolving in this area too. Because if you come on top here and look at what happened till last year, you can get this one. Global Payment Reports 2019, looking for what? Sustained growth. So when we talk about sustainability, it moves in different manner. Say in this particular item, if we come down here, the thing to be highlighted here is, Ripple know things very well and they are positioning themselves in such a manner that they would be taking out profits in huge amounts. Read this one. Triple digit growth in non-travel e-commerce, remote ordering and low value contactless payments. So the low value payments is skyrocketing. Now this is happening at a time when maximum payment volume decline in airlines, hospitality and tourism, electronics and consumer durables, luxury retail, hotels, restaurants and catering service, and the other stuff. Now this is not an old document, this is highlighting you that what is happening with this economic decline. Now they're talking about the health crisis and how economy is being affected, how payments are being affected, how payments itself is highlighting the symbol of economy. The economy is going to the downside, right? So 2020 pre-COVID estimate and how COVID kind of came into the play and kind of changing this one. So when we understand this, supply side uncertainty, factory closures and trade barriers affect B2B cross-border flows. Now that uncertainty is still existing unless we have a vaccine or something to solve this issue, even though I believe something different. But end of the day, the question is, when will the elites stop this, or at least the economy will start to rebound? When will that happen? We don't know. We all will have to wait and see. But when we enter into talking about Ripple itself as a company, we have a lot to look at, right? Now this is actually an important document because I'm taking this from SEPA for corporates. Now if you all understand, that's a regional payment network. SEPA, if you don't have that idea, I'll actually show you guys directly what it really means. Say for example, SEPA itself, directly from their idea, it's single euro payments. So they are looking at the entire European region for that payment structure. If you understand that one, then we can jump back into this, because they are showing this to corporates. Now, as I told, this is an important comparison about many different aspects within this comparison of payments industry. There's a lot to think about. So I'll just check how many of you guys are on it now. Even if it is 1, 2 guys, I'll actually go forward with that. Why? Because these are important stuff, and those who are coming here and waiting here, I don't want them to be wasting their time for others to join the party. Anyway, let's jump back into the document and start, right? So here they're comparing Ripple versus Swift. Now, these are two most popular cross-border payments. Now, for Swift, it's Swift GPI. It's not the other stuff, because now they can't even compare Swift's old network with RippleNet. Why? The instant payment ability and other stuffs cannot even be compared with that legacy 3 days old system. And now when we look at that, they are comparing it 1973, like 45 years. Here, just 6 years, okay? And then when you come to the bottom, you can look at the employees, 300 and 2000. Now, number of clients, 150 plus bank and financial institutions on RippleNet. Here, 160 plus. So, that's not kind of a huge thing, considering they already had 11,000 financial institutions on their Swift network. So, it differs. Now, one of the main advantage, if in my perspective, for RippleNet and customer base is that it has a lot of monetary authorities, central banks and other stuffs in its bag. That really is a huge achievement, because when you consider Swift, it's not like that, right? It's a bit different. It's mainly concentrated just on banks and financial institutions, and Swift can be controlled just by one nation. Say US is going against and saying, no, you can't process payments from these nations. So that really happens, right? So the sanctions can affect payments happening in Swift, and that is where we come at the bottom. It's like, when we come to the bottom, they talk about how these things are evolving, and mainly it's the centralized nature of Swift which kind of gives it, if Swift is going to close today, the payments are going to be stopped. Whereas XRP ledger, that doesn't happen. Ripple, the company, if it goes bankrupt, if it goes off the chain, it doesn't matter. Others who are already working on XRP ledger will continue to exist and use that network. So that is the decentralization approach for that. Now, in the same comparison, they go through different aspects, and all. And the highlighted thing here is, like, say, Xcurrent, Xrapid and all, now it's merged together. They can just use it one day, right? So, instant payment, yes, but instant settlement, no. Guys, this is so important to understand, that messaging is instant, but the settlement finality is not instant. And this is being highlighted for the entire Eurozone payment sector, right? So, settlement means that a core ledger is being updated, and that's not happening with Swift's GPI. Why? Because they are still relying on the correspondent banking network. So can they source liquidity on that network? No, they still need the Nostro, Vostro account, the correspondent banking network, dormant capital, additional fees. They have to actually go through all of this stuff. And then we come to the transfer speed, and look how it actually varies. Intraday payments, 30 minutes to 24 hours. So you can't actually go to them and complain after 23 hours that my payment doesn't reach there, because they'll say, no, it's 30 minutes to 24 hours. So you'll actually have to wait there. Why? And during that wait time, you have to see this determined by the bank, Here, the bank has only 4 seconds to do that. The FX rate, it's not the volatility in the FX rate won't be affecting you. Even 24 hours of a volatile FX system, say USD to Euro, USD to Japanese yen, or anything like that, would really affect the market in 24 hours. The volatility can be much high. So the comparison between the volatility is, it doesn't make any sense there. Now, if we look at the other side here, which is the messaging system, here it's bidirectional, and here it's unidirectional. So it's kind of a chatty protocol here, whereas here you can only say one thing today, like you are listening to a radio. You can just listen, that will continue to say, you can't respond to that. right? So that happens like that. If you want to respond, you'll have to go towards the outer, out of the framework, call them. If you want to say my payment haven't reached the destination yet, then they'll go check the error rate, other stuffs. Now the technology itself, here it's the state of the art technology, blockchain, distributed ledger, RippleNet plus ILP. This is really important to understand, because RippleNet is operated by the company Ripple. You have to understand that. But ILP is kind of open source. Different organizations would be on that one, right? So it's an interledger connecting different ledgers into one base foundation. Now the architecture here, as we detailed previously, is decentralized, and the settlement process is occurring by consensus here, and here it's still batch clearing and settlement. That's what makes the back-end processing thing so much complicated and time consuming. One, second, costly. Now currency itself, you can see the fiat only here, and here fiat and cryptocurrencies, meaning the blockchain, DLT stuff. So what if we enter into digital fiat, the blockchain, DLT technology of central bank digital currency? At that time, will Swift GPI be able to handle those? That's really a big question, right? And then we come to look at the advantages, the disadvantages. We already know that. So we'll just look at the disadvantages side. Here they say 60% of XRP is owned by a Ripple company. You understand. Volatility of native asset XRP. Now we'll say 4-second and volatility. Those guys who are kind of highlighting this doesn't actually understand that. Anyway, slow adoption of DLT by banks. Now I kind of agree that due to regulatory compliance policies, regulatory clarity is delaying that stuff. But it's changing. It's changing over time, because when you look at the conclusion, you really have to look at this bottom line. Nevertheless, Ripple offers better, faster, cheaper technology services to its clients and customers worldwide. So that really is huge, because they start like, thanks to Ripple, like Ripple came up with a lot of innovation, and now Swift is improving because they have competition now, right? So that's what it states here. See, thanks to Ripple's innovative and advanced distributed ledger technology, DLT and its capabilities to address interoperability and scalability issues, Swift is being forced to improve payment processing standards and correspondent banking, a decades-old and inefficient system. At the end of the day, this will be benefit for both users of financial institutions in the future, right? So it's kind of, how that's happening. But here it's changing. Nevertheless, Ripple offers better, faster, cheaper technology services to its customers. So what is highlight? Interoperability and scalability. So you have the ILP there, interledger protocol, to solve that, and you have the XRP ledger there to solve the scalability issue. So if someone is arguing that it's not going to happen, say XRP is not going to be used, show them this. Interoperability is ILP. Scalability is using XRP ledger. They can scale it, right? So now that's just the comparison from SEPA. Whereas if you actually look at the statements directly from these reports, now these are general reports in which, now when I read that, for me it looked familiar, because as I go through a lot of similar documents, it looked somewhere similar. Now the highlight here is, say, 20% of payments are like cross-border payments, but the revenue side of it is 50% of transactional revenues. Rethink about that. That's really huge, because when Ripple, the company, is entering here, that amount would actually be going to the downside. And here, getting comments. Good morning, good evening. Yeah, good evening, guys. Good morning, guys. Here in Korea, it's actually good morning. True, hello, doctor. Guys, I'm a doctoral candidate. I haven't actually achieved that. Yeah, I'm in my final stages of that. I hope just in a year I can be officially putting that title in front of my name, doctor. But as of now, I'm still Mr. Daniel, because I haven't completed that. Yeah, I completed the majority of requirement, like course credits, research credits, publication, and all. Just working on the thesis now. It may take a year to go through all of those processes. So anyway, now jumping back here, when we look at these entire documents here, you really have to understand how this really is evolving. Because say, for example, when we jump into page number 23 of this particular document, it kind of takes us through the technologies bringing rapid, and significant innovation to global transaction banking, right? So in this end, it's blockchain from point to point to distributed ledgers. And when you enter blockchain, you can actually see them talking about how things are really evolving. And they mention the correspondent banking networks and things evolving based on Ripple. So they established a use case in cross-border payments and correspondent banking, such as those developed by Ripple. Distributed ledger technology enables the secure and trusted sharing of validated data among all participants in a given transaction in real time. A powerful value proposition. Understand this, guys. If you're starting a business and providing these kind of a value proposition, the customers would be really tempted. Now, if you don't understand the actual value proposition there, that's Internet of Value, the interoperability, the scalability. So it is all touching the native asset XRP. Majority would be coming out and stating, you know, that's not just using XRP, it's just RippleNet. And don't be confused in that manner. Now, if you look at this for SAP, blockchain innovation with SAP and Ripple, that really is happening. The implementation will be happening. Now, overseas payment process took 20 seconds instead of 3 days. So it's simply said, it's like we are using Ripple instead of Swift, which takes 3 days, you know, processing, blah, 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 fees and other stuff. So when you look at the payment engine here and the cloud platform, which is getting connected to Ripple Gateway, Ripple Connect AWS. So I think that's Amazon Web Service there, in which we in a document from Amazon Web Service we previously went through, they kind of directly advocates to use Ripple for cross-border payments. So we went through that previously, right? So that gives us an understanding that giants and corporates, governments, central banks, everyone is aligning to this particular side. Now, it's all about our understanding. If we don't understand this, it kind of changes from one side to another, right? Now in the comments, you're on fire tonight. Thank you. Hello, hi Johnny, hi. Now yes, we'll actually go through the charts as well. I would actually like to take you guys through the XRP charts. But before that, we'll actually go through the entire fundamental side of it. First, to understand where we are headed right now, because when we look at the price fluctuations and all, we'll have to look at patterns forming. We'll have to discuss about how things are changing on a daily basis, because we are following price on a daily basis to give you guys an idea about it, right? So we are just breaking about that, and we'll come back and discuss about that. So before that, when we look at the fundamental side of it, we kind of get information, right? These are all happening. Ripple is not a company like, say, for example, if they have one partnership, they won't actually come out with that bandwagon and make that noise saying that we are having this. No, they are not doing that, right? They are doing their work quietly. They are letting their success speak. And that's what a company like Ripple should actually do, right? And that's really happening. Now, if you look back, 10 months back, they announced that they had 300 customers. And at the same time, CEO Brad was also highlighting that we are signing at least 2 to 3 contracts per week. So take 2 in a month, it's 8. So in 10 months, that's just 80. So 80 partnerships, which is like, you know, something going to be announced soon. But at the same time, we get it from CEO Brad and from David Shaw that we have a lot of unannounced clients due to the non-disclosure agreement even last time in their announcements. But what you have to understand is the swell is coming soon, and when that happens, at least this time, they may announce it. Why? In my opinion, they state, like, say, the CEO itself directly states 2020 is the year of digital assets. So huge announcements are pending after the pilots. Now the successful pilots can usually lead to production of that contract. Now when we look at that production, you'll also have to understand why that will go into production. Because the prospects, the value prospects of XRP is actually a bit different from other networks which are trying to, you know, address these issues. Say XLM will be working on a peer-to-peer basis mainly, whereas XRP, you know, say for example, peer-to-peer transactions, say PayPal, it's an institution for processing those payments, right? So imagine you are using PayPal for that. Cool, P2P payments are being executed. Now, PayPal is the guy who processes that payment. PayPal is an institution. Now, if the business institutions need XRP to move their value, then automatically even the transaction being processed by other networks will be connected or routed back towards ILP in this enterprise grade solution which is provided by Ripple. So that for me makes a solution that even though others are gonna get their market share, the valid share, they also will be routed back via ILP because it has to go through the central banks, which is the final destination of every settlement. So if Ripple the company is the only company getting that attraction from central banks, for me that kind of gives a clarity that this really is going to happen, because the small and medium enterprises which Ripple is concentrating is gaining traction. Now that's a bit old article, but that's the reality. When we just saw the McKinsey report highlighting the current issue in due to the coronavirus, health issue, economy doing down and all, we just went through that, right? We just highlighted that. I think it was in this article which was kind of highlighting. At the same time, low value transactions were booming when the other side of the economy was kind of lagging behind, jumping out of the cliff and all, right? I think in which document was that, I'm not actually sure. But anyway, when we actually look at those, we have to understand the current transaction rates are going through additional fees, penalties, blah blah blah, all the stuff which we have to go through. Now, how payments can adjust to the current pandemic, because world have to adopt in a lot of manner. If you look back, say last year, at least in different parts of the world, you can see a lot of restaurants open, a lot of parties going on. Now it's not there, right? The world is changing, it's becoming the new normal. In the same way, the transaction is also differing from the traditional manner of cash into digital tokens, digital assets. And when that moves, the challenges are immediate with long-term implications for global, regional and local economies. So that's really happening here, right? And the question, can we accept a $4 XRP in mid-2021? We can't directly argue about a time frame, but $4, Anandu, for $4, it's more like, just about the all-time highs, which it did in 2017. So it will completely depend on how you look at your take profits. Now, say this is a daily chart. If we move back and zoom a bit out on a 3-day chart, you can actually understand that the price is kind of moving into from a bearish rally towards a bullish sentiment. Now, when I argue about that, I would be arguing clearly because, with what I am looking at, I can see that the price is kind of acting like this. And first, it just broke above this particular resistance line, which is a critical path to look at the trend. Because if we are evaluating that trend, we are able to understand that the price kind of previously broke above, it went, now it came back and it just dipped inside. But on a 3-day chart, we can understand that the 20-day moving average is still going to cross the 200-day moving average, which is a bullish sign. And the shorter time frame charts, like say 12-hour, 4-hour chart, if you go in and look at that, you can understand that the pattern just broke to the upside. Now, to clearly understand the pattern, you can go into 2-hour, 1 hour, depends on how much clarity you need. You can see that it just broke above. But as previously we here got that fake out, we'll still have to look at that bounce. If the price is bouncing above and moving about this area 0.2486, then that pattern has actually broken to the upside, meaning we may actually move to 5 to 6% to the upside. Now, that's on a shorter time frame. If we look at that on a daily time frame, say this candle is moving 4 to 5% to the upside, it may be coming to this area to retest that particular region. Now, that being said, previously when we did this, we never managed to go out there and close and consolidate in that area. But now that really is happening, right? So in a weekly chart, if you are looking at that as a time frame, if you are looking at 2021, mid 2021, say for example, we are going to take a vertical line and put somewhere around mid, say June, July of 2021, and look at how many days, number of days are left. Because if you're looking at time frame, it's really hard to even understand what will be happening in particular time. So I won't be able to completely make you happy in that aspect, but I'll actually try to respond to that with the ability I have. Say for example, we'll take I think it was actually 1314 days which it actually took. Okay, 1316 days. So if you take 1316 days from here, we kind of reach somewhere say near here, which is like October of this year. So it's not necessary that the fluctuation will start happening by that time. This is just looking at what really has to happen. Now that is based on, you know, the start to end of a fluctuation. Now if you look at this, okay, we'll take out the RSI and other stuff, just look at the price action. Now if we are looking at this price action in this particular cycle, you have one pump to the upside, a correction, then another pump and a correction. Now if you look at the starting point here, you'll get in this entire cycle you have a double bottom here, right? A double bottom, one here and another one here, which is around 0.0028, and with the price actually came back, retested the same area. So you had two peak and two bottoms here. In this cycle, which is being completed now, we also have something similar, the first peak and the second peak. And if you look at this on a monthly chart or even on a weekly chart, you can actually understand we have a double bottom here too. Now if you have been following me for 6-7 months, we previously have actually discussed about this, the time series, price fluctuation series, percentage variation and other stuffs. So if we are looking at that in that perspective, say from first top to the start of the next cycle, it kind of takes you around 197. So in that aspect, you'll have to take this from here to 1197. Say we'll take it somewhere here, right? The mouse is slow. Okay, so based on that, we should be moving to the upside here. Now the difference is that the first pump here was the peak of that cycle, whereas here the peak of cycle is here. So if we are to plot the same thing, move that from here to the peak of the cycle, we would actually change that to somewhere here. And if you put a vertical line to understand where it is ending, it's ending by April 2021. So that's a different case scenario, right? So if you look at the next thing, which is the second pump of the cycle here, and look at this one, we can see again 818 days. So if you just measure that, we understood that it's clear that we went more than that, right? We are already passing that 980 days, so we are nearing that 1000 days. But as we just talked in the initial term too, if we are to move that 1314 days, we would be coming somewhere here by the 2021 April, May. Now these are just time frame based analysis of the price fluctuation, right? We only have 2 market cycles to analyze that one. Now within that limitation, when we are looking at this fluctuation, we get to notice that yes, the chances are there that in some cases, if you look at the probability, maybe 30% to 40% chances that the price may start to move next month, but we are not sure about that, right? And the late aspect which we get from this technical analysis of evaluating both the cycles take us towards April 2021. Like that can be the latest cycle or the last moment when the price break to the upside. Now that being said, if the fundamentals are to be changed soon enough with the regulatory clarity which we all need and are looking in the payment space, we may even start before that. But you know, the governments are really slow, we won't actually understand. Hope Nandu is a bit clarified with that aspect. Now when we say that one, what you have to understand is, even if we are going to go to the average side of it, say the previous move from this particular area to here was around 70,000%, and if you are to take the average in the sense, say for example from here to here, the pump was around 8,000%. Here it was, I believe, at 2,000%. If you measure that, that was from the top to bottom, I'm sorry about that. So if you really measure that, you get kind of yeah, around 2000%. So if you take the averages of each fluctuation which is happening there, you should be getting at least 2000-3000% pump from the point of that breakout. So if you are looking at that, say 0.3 and 2000% breakout, it should be leading your price towards somewhere around, say, it should be reaching around $6 to $7. Now, that is just the average. Now, we all understand that ROI which XRP provides is usually the highest in the market, right? So in that aspect, $4 shouldn't be much of a issue there. Now, yeah, hope Anand was actually a bit clear about that. Thanks, buddy. So, do we have a last dip? Now, that question can be answered just analyzing this pattern itself here. Now, you guys can actually let me know how many of you guys actually agree with me on this analysis of patterns, because not everyone has a similar perspective, right? So, you know, Alex, I'm trying to give you a perspective, Alexis. Okay, so if we zoom out and look at it, maybe you have actually seen this type of analysis previously. So we'll just see, we are connecting first top, second, and we are extending that line here, and we get to see that the price is really respecting that resistance level. And when we plot that trend line and understand that once the price broke above that one, it came to the bottom, it tried that, or it tried to come back into the trading range, but it was being rejected. Now, this is on a weekly chart, right? So if you look at a 3-day chart to get a bit more clear view, a bit more clarity in that aspect, to understand what really was happening in the pattern side of it, as we are looking at the pattern here, right? You can clearly see that the price went to the upside. It made like this one, and then another thing like this. And here you have a fake out, a huge fake out, right? And then again it dipped and made a new low compared to this one. This one is a new low. I hope my drawing is not actually that good. Hope that idea which I was trying to put in there is clear for you guys, right? Now, what if we actually look at the current scenario here in this cycle where we are, right, and plot the same pattern here? So if we are plotting that, we'll get something like this, more or less something like this. Say we are connecting these resistance points, say 1, 2, it comes near 3, 4, 5, there's a fake out 6. On a 3-day chart, we can plot it like that, and the 50-day moving average is acting as a support. Now, if you plot in a weekly, you can argue that, you know, it can be connected like this, the price went below and it's kind of bouncing from there, or it's a fake out, taking more sellers here, and as we push to the upside and pass through 0.32, the stop losses of majority of those sellers would be kicked in and they would be kicked out, creating more liquidity and pumping to the upside, and that would be a massive pump. Believe me, guys, if that's happening, you know, in search of that stop loss hunting, that really would be happening. Now, true, I believe once we have clarity on regulations, it won't go to 4 or 5, it will go to 20 to 50. Now, I kind of agree with that. If we are looking at the pattern side of it and are looking to, you know, extend this one, the average side of this, say 140% from the bottom, to say if we take just measure from the bottom, which was around 0.012, and try to plot it, say we'll zoom out. Now we'll really have to zoom out that one, and then take this to the upside, say 70,000%, which would be kind of half of that. What we did last time is itself 89. Believe that, guys, $89. Now that's not a small thing, it's a huge thing. Now, Crypto Kajon up. Thank you, buddy. Thank you for your 9.9 and $10 contribution. You know, support like this really kicks in the motivation. Waking up early in the morning, doing all this research, and then presenting it to you guys. This is the reason, you know, the motivation from you guys, the support from you guys is enormous. We started, now we are nearing around 1 million views in Scientific Investor channel, and we are going towards that 10,000 subscriber mark. Now that's only happening because of the support from you guys. Otherwise, it would never have been reaching that area. You know, I'm not a native English speaker, so when I started this channel, now sorry if if you don't mind, can I take 2 minutes to explain that? Say when I started this channel in first 2 months, 3 months, I was being criticized from all around, and only say 5 to 10% of my viewers were supporting me. And that was really the thing which kept me going. At least I was considering, even if 10 individuals like what I'm doing, that means I can provide value for their time. And even my family even my family was arguing, buddy, you did engineering, you did your masters, you are working in Dubai, you are in UK, now you are doing your doctoral, and this is something what you're going to do? Like, my family wanted me to become a preacher, like Christian devotional. I'm coming from an Orthodox Christian family, so then I thought, yeah, one side of it is like I read Bible a lot, I do argue a debate with the priest and all blah 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 stuff. Then I started, I understand, I started a channel named as The Light Word of God, but I couldn't actually continue uploading videos every week. I was thinking about uploading videos every week, but that actually went well. I uploaded some of the video, but I didn't get much of a response, or I got lazy, I can say that. But for sure, once I get off this doctoral degree and get more time, I would be continuing to doing that. Anyway, for scientific investor, we are really now getting a bit more attention from giants in the XRP community itself. And that's only because of the support from you guys. So let's continue here. So here the question was we are looking at is the half of this one. See, if we are looking at the bottom here of this particular entire cycle and take it towards the top here, it's 140,000%. So if we are to look at that one like that, say the 140,000% in terms of the price fluctuation from this bottom, then it would be taking us somewhere around, did I made a mistake? Let me check. Say this is 75,000%, and as we move it would be 140,000% would be somewhere here, say around $170, $180. Now from the current point, when an asset is valued at just below $0.3, and I say the price can reach $200, majority would be looking at me like this guy is crazy. But you really have to look at the history. This asset has done that previously, 140,000x, without all these fundamentals, right? Now these fundamentals are playing out. The foundation is being concreted by Ripple the company, and we just went through some of the documents which kind of, some names Ripple the company, some shows the vision of Ripple the company, and some does use the words of Ripple the company without naming the company. So that kind of gives you an idea where we are really headed. Now this is 300 customers. Why I'm showing this? Because in the comparison here with Swift, they just showed you that we had around 150 customer bases at that time, here 150 plus, right? But 10 months before we hit double that, 300 mark. So the fundamental side of this is becoming really crazy. And if you ask me personally, I'll say it won't be just the 140,000% which we had last time. Now, that being said, you also have to understand that institutions are now entering the space. Institutional custody services, trading services, it's all coming out. And when institutions come in, they would try to manipulate or take money out of your pocket a lot. And that's why in the Patreon group, we actually share a lot of charts, setups for XRP and other assets to let you guys understand what the big traders from big institutions would be looking at. Now, I personally lost a lot. Let me look. Where is my wife? Yes, she's not here. I personally lost a lot of money learning this thing, that where the stop losses should be kept. Because in the traditional manner, you will say you are trading this market, this is your previous high, keep your stop loss here, just above that, if you are selling this market from here. In that aspect, now, if you're looking at that, you will have to understand the price would come back here, it will hit that stop losses and then go back to the other side. That is what you are seeing here in terms of, say, for example, this particular level, the price went to the upside, gave you a higher high, and went to the upside, right? And then if someone is looking to go against the market, he would be keeping, say, this is the bearish trend, he's taking a long position here and putting his stop losses somewhere here. Now, it's only the huge guys who look at what was the previous low here, that's this, and putting their stop losses just below that. Even they are being kicked out from here. So for me, as if I'm trading, I would be putting my stop losses way below wherever possible, like a hodl position, right? I won't even turn on my stop losses there. Now if I'm using leverage, yeah, I'll try to keep my stop losses way below this, at least 20 to 30% below the last low. Say this is the last low, and if I take 20 to 30%, I would be putting my stop losses somewhere here. That would give you the ability to stay in the game even if your decision were right. Say the market would be going to the upside, it would go upside after kicking you out. That really happens with a lot of traders, and that's the reason I'm highlighting this one. Now, I learned that stuff in the hard way in Forex firstly, and then in the crypto. Then I started going the other way, looking at the fundamentals, technicals, combining both, and understood that this is a game of patience. Only those guys who are here for the long run would be making that money. Now, when we say this 140,000% suggesting $200 XRP, this will only be reaching the portfolio, like your portfolio, if you're patient enough. Say you're a guy who entered here and you saw a huge fluctuation like 8,000% and you exited, right? Maybe you exited somewhere here, and then the price is going to the downside, consolidating. You say, okay, that's it. It's making a distribution phase and the price is going to go to the downside. So if you are looking at it on that manner, what you would be understanding is like that can go wrong. So, that all would be happening if you are impatient. But if you are a patient guy, you would be looking at the distribution phase, actual distribution phase. Meaning, in the distribution phase, you would be kicking out this high first before going down. And that happened here. Now, yes, that was a crazy hitting that high, right? It should have gone a little bit here. But human psychology, when evolved with money, it goes crazy. And that same thing is happening here in the bearish too. When the price is going to the downside, psychology is low, investors are not interested in that asset much, but on a weekly chart you're actually getting a inverse head and shoulder here, for which the target would be, now yeah, it's not yet confirmed, only if it breaks. Okay, I'll remove all of this first and show you guys that only if it actually break above this particular level, which is acting as the neckline. Now the neckline, if you put it like just a horizontal line, it won't be accurate unless you put a support resistance zone there. Now that support resistance zone is really acting as a head and shoulder. If you ask me, for me, I'll consider that as a head and shoulder. Say this is one of its shoulder, and then this one is another shoulder here, and then this one is the head. So if we are to break to the upside, we may easily see a 130-140% upside, the pump. Now that, say, you can argue till the top 180%, or till be conservative looking at that point, which is 150. Now in that aspect, we would be moving around 0.5, 0.7, these levels, which are really overhead resistance for us as of now. If we manage to reach that area, that means we are invalidating these overhead resistance, which lies somewhere here. Now once that happens, it would be crazy, guys. Why? Because the FOMO will be coming in such a manner that I'm gonna miss that opportunity. I'm a guy who bought even positions here around 3, 3.3, 3.5, thinking that the price will only go to the upside. But I failed to understand at that time that it is a distribution phase, and that's why I tell you guys that I learned it the hard way, and I'm trying to educate you guys in a manner which makes sense. Now, if these are all long-term perspectives, now price would be fluctuating on a shorter time frame, right? If you are looking at it on a daily basis and getting depressed that the price is not going to the upside as you want it to do, you really have to look at what really is happening. Now the price came to the downside, it's coming to the downside, and it is now making this. Now there are usually two patterns. One, either the price can go down, or the price can go to the upside, or it can consolidate, make a pattern in between. Say if you are looking at this like this, you can argue that it is forming a channel, a widening channel like this. But if you ask me, I'll actually align this like this, making this a fake out, and then connecting all the bottom. Say I'll zoom in. If it's clear for you guys, do let me know. If it's not clear, do let me know. So I'll actually touch these bottom here and try to connect those in such a way that it makes sense. So it is leading like this. Now those are wicks. Now if I connect the close of this, we get something like this, widening channel there. This widening wedge kind of usually highlights a reversal pattern. Now that being said, you have to wait until the point where the price is moving above this one or below this one. Otherwise the price would be still moving within this pattern. If you are taking a position, it should be based, if you are trading, that should be based on a break here. Or if you are a long-term investor looking for more value, you should be looking at a point where it is at the support to buy. Now that kind of makes sense when you are entering there for a long run and looking for more XRP for your money. Now that's kind of the manner which you look at it on a technical basis. Now let me see what's actually going on in the live actually. Let's see how many of you guys are there. Yeah, 500 guys came in, 50 are watching, and thank you for supporting in that manner too. Now let's look at the other stuffs which really connects this. Crypto ATM operators now require a new license in Germany. So regulatory clarity is coming in such a way as we enter into the electronic digitized tokenized economy. Previously we went to ATM to take out cash. Now the option is that you can put in cash and buy digital assets. So that's a financial instrument, right? You can use it for capital gains. You can use it nowadays even to buy a coffee. Now yes, it depends. If you are using BTC to buy a coffee, you may not actually get the coffee when it's still hot. So it's still arguable. Anyway, when we look at that, German financial regulators classified digital currencies as a type of financial instrument. Now that varies from region to region, right? We all understand that. If you look at Germany, they are looking at it as a payment token, one side, the payments, and next side, store of value, the investment side of it, which is the digital asset. Now, there are currently some 28 crypto ATMs installed across many German cities, providing customers the chance to buy a range of digital currencies including BTC and ETH. Now, these are the top two which is being highlighted in US, Europe, everywhere around the world, and that would still gain more traction when the investors are entering this market. So that's kind of a easy understandable item there. And here, which I kind of highlighted previously, is Ripple is quietly working with government agencies to ensure the compliance. And that's why when we have regulatory clarity, this thing becomes the wealth which we can't even imagine. Now yeah, XRP is a long-term hodl for generational wealth. I kind of agree with that, but at the same time I would also argue hodl the position but accumulate. Say you have 1k, 2k, 10k, 20k, 50k XRP. If your average position is, say for example 0.17 and the price is 0.4, and you have enough, you think you have enough, then you don't have to actually add into that basket, increasing your average. Now yes, when we talk about $100 XRP, $200 XRP, the average, increasing the average to 0.3, 0.4 doesn't actually matter. But if you already believe that, say you reached your goal of that 50,000 XRP or 10,000 XRP or whatever your personal goal is, because if you look at the total supply of 100 billion and then look at the entire world, the population of the world itself, how many coins would actually one receive if everyone is to buy? And then look at your portfolio, you'll understand how wealthy you are in terms of that. Now yes, BTC guys also use the same argument, but if everyone in the world is going towards BTC to use that in terms of payment, I don't think that's going to survive. It's going to eat a lot of energy. It's going to eat the total energy supply in the world. Whereas for this particular network with the scalability to do that, it's not targeting peer-to-peer market, right? It's targeting the business-to-business market. It's an enterprise grade solution, and that is the reason why we need the regulatory clarity. It's not only the retail guys entering in, it's the huge institutional money which will be entering. Now, a popular crypto analyst by pseudonym Crypto Whale, has recently explained that more than any other crypto project in the ecosystem, XRP and Ripple are working hard to ensure mainstream adoption of its cryptocurrency, which is XRP. Now, when we look at that, and when we analyze different documents from Bank of England, Accenture, little B, Santander, all the other banking and central banking institutions, say from Saudi Monetary Authority, Malaysia, Singapore, and other stuff, we can easily understand that they are all looking at this as the future, right? Now, if you want to make money or profit in the future, you should be basically having those positions now, because if the price starts to fluctuate and you don't have this position, it doesn't actually matter. Even if you want to make that kind of profit, yeah, you will be able to get profit out of it, but it won't be that generational wealth like a true, actually highlighted here. If you really need to be doing that, then you need to be entering the market when the price of the asset is low. Because now, sorry about that. If you look at the entire market cap of crypto, and then look at the price fluctuations happening here in just the XRP side of it, and look at where the accumulation area was previously and how much percentage those guys who accumulated there got their profit. Say we take it from like this and try to connect the support and resistance line there. Look at how it fluctuated there. Yeah, for me it looks like this. Say if you zoom in, the price dipped into this 3 times and then just stayed above that or retested that area a lot of time before it started bouncing to the upside. So that was actually the accumulation zone, and this in here you can actually argue that that is the reaccumulation phase when the price was being moved in this area. So what can we actually understand that same thing in this cycle? Say here you can see that 3 try there. Now previously history rhymes itself, it doesn't actually repeat itself, it kind of rhymes itself. So if we plot this here like this, say for example, and then make the color change back to this one just to get that coherence here. So if you look at that, this is the accumulation area for XRP in this area, and then try to plot it with that clarity which you have from here. You can actually see that this area was the reaccumulation phase. Now that won't be that big when we are looking at the reaccumulation phase, it will be something like this. Now if you look at that, you will understand something clearly. We went into that dip which is the accumulation zone, and now in the reaccumulation phase. Now when you extend these lines, you can argue that we have a support here in this area and then here which was resistance here. So you can even argue that the entire area combining both the rectangles is the actual accumulation zone, and then the price is kind of retesting that area, bouncing off. Say this was the resistance previously, which is acting as a support resistance zone now, and the price will bounce from there. But in reality, when you look at that, you can understand 1, 2, 3 bounces inside that accumulation zone there, and here 1, 2 and 3 times in that accumulation zone there, and then majority of the other touches in that area was a reaccumulation zone in the last cycle, which was going from 2016 to 2017 at the last part of that cycle. Now if we are looking at that, we can understand something similar is really happening, right? So that kind of gives us an idea about that. Now message in the way. Now thanks Ron. Then Alexis, the chart shows that XRP will take off anytime. What about September 16 announcement of XRP? Now guys, as I'm getting a particular date based on some announcement from say fundamental side of it, won't actually do much of it, because usually it's like sell the news. Anticipation of that news kind of builds up the price, pushes the price to the upside, and when the news is coming out, it won't usually fulfill all those anticipation, and what traders does is they'll take out their profit or remove their positions, reducing the demand. When the supply is same, then the price is going to the downside. That's what usually happens. So I won't actually care about a particular date about that, because as previously stated by True, this is something for long-term holder. Now why I say that, if you don't hold this position when the price is hitting this low, you won't be able to get that profit. Now I have shared this previously, that is the market cycle chart. I won't be using that market cycle chart from this one. I won't be actually looking at that one. Instead, I would be looking at a different market cycle chart in which you can understand the different phases of accumulation and how things really move there. Say for example, when we enter into visual capitalist and look at that chart, hope it is actually clear for you guys. I'll try to zoom in, or let me yeah, that works. So when we look at that, yeah, it's kind of clear. In the accumulation phase, you can see this. We have first state, second state, and then the third one, right? So in the accumulation phase, before the price gives you that disbelief rally, we have three phases, which is the early accumulation, mid accumulation, and late accumulation. So now getting back into the chart and looking at it, you can see that there is early accumulation, which is the guys who understand that yeah, this is the right area to buy, then the next area, then the third one. So when you compare it with here, you can treat all those three accumulation state up, and then the price starts to move to the upside, making new high and a higher low, right? If you compare this, if you draw a line here, you can understand this was a previous resistance and this is acting as a support here. So that kind of gets you a clarity that that is acting as a support, and then the next bounce is going sky high, right? So that's still the first markup, early markup, then the mid markup, late markup. How that affected here, you can actually see one pattern emerging here and something similar but in a smaller scale happening here, right? Again, that's happening, and then it kind of shows you that we are passing the mid markup state, showing there are chances for pullbacks, and it shows that it's going to be coming soon, and majority of the guys would be taking out their profit somewhere here as the price hits new highs. Say they would take the 10 to 20% profit, 30% profit, they would just keep 30 or 40% of their portfolio there to test whether it's going high, and when it is becoming into a bubble, majority of them take their profit there. So that's the difference in understanding that. And then when we look at the end of that cycle, which is the distribution phase and early decline, mid decline, late decline, that's what we really have to understand here, right? Because we are ending this decline phase here and starting to move to the upside. So if you want to really understand that, say for example, we'll zoom out and look at it. Say we completed this, either we are here, which is this side, right, the accumulation side, and before that happened, what all actually went in, say the early distribution phase, mid distribution phase, and the late distribution, and the similar in decline too. So if we focus on that in the price, say shorter term moving averages begin to cross one another, which indicates a confusion of the trend. Now let's move into a daily chart of XRP and look what really happened in that distribution phase. You can understand that the shorter term moving average, now haven't actually used that 10-day moving average, this is just the 20-day moving average. So if you were using, okay, not if you were, we'll just use that, right? We'll go and add a 10-day moving average to understand how it really affected the price, or how it really gave you the idea about that. So that's 9-day moving average. Just in that area, the price just broke below the 10-day moving average, right? So that kind of gives you a bearish symbol, and it again continued that momentum, came back, retested that 10-day moving, 9-day moving average, and bounced to the downside. So the first time when you got that it broke to the downside here, that gave you a signal that the price is changing trend. So that is the first thing. These stocks have become more neutral and should be looked at as a correction through time. Upside is still possible but becomes less likely, right? Some of the shorter term moving averages may be declining and acting as a resistance now. So if you look here, you can understand that not some of, majority of the moving averages are acting as a resistance. So from that area, it's kind of clear here, this is clear that 10 and 20-day moving average is acting as a resistance. The price is going to the downside. Now what it matters for us now is the question that are we going to start a new cycle here, right? Which would be majority of you guys are interested in. So let's look at what actually happens in the mid and late cycle. Rallies to longer term moving averages typically fail as more participants lose hope in a rally and the reality of declining stock starts to settle in. These stocks offer excellent shorting opportunities. So whenever the price tries to move to the upside, make a bounce like this, sellers jump in and they sell the price, making new lows, and then it enters into that consolidation phase where it can be argued as a capitulation happens, and then the price every rally is being sold there and all. Now, last decline, the downward momentum is still present and declines can come rapidly, but so too can a violent short squeeze rallies. So if you look at here, you can understand that the price was still moving to the downside, but it just gave a short squeeze here and then dropped dramatically, rapid drop as they mentioned, and then slow grind to the upside. The momentum to the downside is huge here. Say for example, it took in we'll measure in with that accuracy. Say it took like 26 days to go 70% to the downside, and from that bottom, if you are measuring to reach that 70% to the upside, it took like 40 days. So the momentum is clear. Now the question is, okay, we understood that the decline side of it is complete, right? Then we have to understand the accumulation stage. Higher lows will often develop, but the stock is unable to penetrate a longer term resistance level to create a higher high. So look at higher lows in this market. Let's take out all the indicators and just look at the higher lows in this market. This is the lower low. We'll just draw lines. So we'll just use horizontal lines there to understand that. See, 1, then 2. So this one is supporting this one, right? We made a low here and then we went to the upside, but we came back, retested that area and started to move to the upside. So again in that area we got another one here, and that looks something similar to that. There is no much of a huge chance, right? And then this one. So still we are making higher lows there. So in a term that this is happening, it really is happening, but on a longer term resistance area, if you look at that, we are still not breaking above that. So if you move into a weekly chart and look at the moving average, which is the 200-day moving average, you can see that that is acting as a resistance here. So what was the state here? Higher lows will often develop, but the stock will be unable to penetrate a longer term resistance level to create a higher high. Moving averages have flattened as buyers slowly gain control. So look at the chart and ask yourself, who is actually gaining control? What really is happening? If you take out all of these lines and look at the just the bottom, try to connect those bottom. What really is happening? What is the price actually doing? Is it making a turn, a U-turn, a round turn, rounded bottom, whatever you would like to call? But is it really doing that? It is, at least for my eyes, it really is doing that. So in that sense of a market cycle, psychology, money, human beings, it really is happening. Now, it's arguable that bots are in this place. They are doing trade automatically. But what are the bots doing? They are doing micro trades in terms of time frame. They are entering into the market whenever there is an opportunity based on price and pattern, and then they are selling that instantly for that profit. For them, even 5%, 2% profit is profit. They would be exiting that immediately, taking those profits. Now guys, if you have any other questions, I would like to go through that and then end the live here and go have my lunch. So, if there are any questions, you can actually let me know. If XRP will use worldwide, it must be stable. Now, buddy, I kind of understand that perspective which you are trying to showcase. Now, if you look at the pattern of XRP, okay, it will be hard for you guys without comparing it with other charts. So I'll take, say for example, BTC itself, which will make it easier for you guys to understand. Now, you're talking about volatility and stability, right? Alexis, I think I'm trying to respond to your question, okay? Say this is BTC. If you look at BTC, say let's take our weekly chart and look at the time frame analysis for this, and when it started its bull mode, how it was moving. Say it was from 15 August towards hitting that 2017 end, right? So it's like 840 days continuous to the upside. Now if you look at that volatility, you can say that the price went 9,600% in 840 days. Now for a trader, it's cool, but when institutions are looking to use this for payments, it's not stable, right? Now come back and look at XRP. What do you actually see? It's not a question of anything. Even if you take it from here to here, you get like 300 days, 72,000%. But in reality, you get to see this. First 70 days, it was volatile. Then after that, it was kind of stable for next 4-5 months. 200 days. Woo, cool, 7 to 8 months, right? And then again, instantly, in between 28 days, it went to the upside. So only 100 days were volatile. Now look at BTC, 800 days. If you look at small corrections and take those out, you'll still get around 500 days of volatility there. Why? Because the correction happens here in BTC is like it goes down. It's not staying there as stable. Instead, it's going rapidly to the downside. Volatility means either going to the upside or coming to the downside directly, right? So that's cool. I hope, Alexei, you get my point, which I'm trying to illustrate. Now, BCB and DIY, so that's blockchain backer, and digital asset investor, feel TA points to a soon push upward. What's your perspective here? Now, based on, say, for example, if you are looking at BTC, which majority of them would be looking as a trend for the market, you can actually see a head and shoulder pattern here, or at least majority would agree with the cup and handle pattern, which I expect it to complete soon. Now if that is to happen, then it would be something like this. You get a cup there, and now a handle should be forming something like this, and the neckline for that is certainly not horizontal. It kind of looks something like this if it has to actually meet all of those points, right? Head, a shoulder, head and a shoulder, if you are plotting that inverse head and shoulder, and then cup and handle. So if you actually measure that from the bottom here to the upside, it's 160%. When we say 160%, it's small, but for BTC, that 160% is actually huge in terms of value. If you plot that here, 160% for BTC, you get like 35,000 per Bitcoin, and that's actually huge. Hi, do you interact with chat? Buddy, I'm actually trying to reply to all of your questions. So if you have any questions, you can let me know in the chat here, and I'll try to respond it here, because typing in all of these would take a lot of time. I hope this way it would be easier for you guys and for me to respond to you guys. So that's for John. Now, in terms of that one, if we take out all of these and just look at the support resistance zone and look at how the price is being affected, we can see this. Now that should be red. In fact, that's acting as a resistance. But if you look at the price, you can understand that these areas are acting as supports, and the price is making higher highs and higher lows from that particular point. If you are looking at that, you can understand the price is still moving to the upside. Now those are small areas. Now once the price moves this side, that can be considered as a bull run. Now even this is a bull run in the term, like, unless you get the point, say this was a bull run, right? Unless you broke above this particular area, you didn't actually had that confirmation, right? So once we broke about this particular high here, that gave you a confirmation that this is that bull run we are waiting for. That's cool. Now let's look at XRP itself. As we just explained, all of these kind of plots towards that. Now to reduce the fluctuation, and you can go into a monthly chart, or at least you can go into a 3-day chart and use Heikin Ashi, right? So Aarti, quick recap for those who are late, please. Thank you. Buddy, first was actually fundamental side of it, which went through different documents from McKinsey report and others. So I hope anyway, the live is actually nearing its end. It's 12:20. I'm feeling hungry, and I hope the lunch biryani is being prepared. So I would be jumping. So then you can actually watching it from the beginning. That would be better, because there's a lot of things which we went through, different documents, then the TA itself, time series, price fluctuation, and all. So for the other guys who are still continuing with me, say on a monthly chart, what you are seeing here is each and every time this, say it bounced to the upside, this was the high day, which is a lower high compared to this one, and again repeating the same pattern, and again repeating the same pattern. Here we came somewhere close to the previous high. That was cool, right? And look at that candle here, the monthly close of a candle in green after covering all of these negativity, bearishness here, and coming back to that area and retesting that level. This resistance previously is acting as a support here. That really is cool. John, I am a Korean, where do you live? So nobody, I'm in Busan actually. So yeah, that's on a monthly chart. Now if you move into a 3-day chart and say you use Heikin Ashi to understand the momentum, how it is changing. Now look at the momentum here, number of green candles or red candles. It really is changing, right? The number of green candles taken to that percentage of fluctuation. If you look at that, it really is changing in these areas. So when we see next pump, it should be giving us more momentum to the upside. That would be cool in that aspect, right? At least for me, I'm looking forward to such a price fluctuation there. Now, yes, I understand. Understanding the price action, majority of us uses the Japanese candle, which we actually follow. Now, when we look at this particular red candle, which shows a bearish shaped candle here, and the moving average crossing to the downside on 3-day, which is bearish, that kind of gives us a perspective that it's going to be moving to the other side. So no waiting for dates. I'm tired of hearing the hype dates from shady XRP YouTubers. Why hide that? Show that. Because I'm not going at any date. Here you guys can understand, I actually showed you guys different possibilities ranging from October this year towards April 21, 2021. So I'm not jumping on saying that this is a particular event going on this particular date and the price is going to boom. I'm not saying that, right? We are looking at something different. Now here coming back to this point, we can understand that this was the low here, which we took out with this candle, with this red candle. So if the price is going to the upside, retest this, and if the price fails to break above, then look, the price will be coming back to this point again, retest that area, and then go to the upside. Unless we break above this particular level, which is 0.2596, say 0.26, it won't happen actually. Will it happen? I'm sure, but when is that big day? Joe, I would like to ask, now I don't want to offend you guys, but as I've been explaining, when is a question no one can actually answer. But if you can do the proper fundamental and technical analysis and go through the documents, and if you have that cognitive ability, you will be able to look at something which is the probability, the odds. Now if you look at experienced successful investors in this area, not in cryptocurrency but in investing side of it, you can look at Mastering the Market Cycle, a book from Howard Marks. He shows you that you have to look at the odds, and turning the odds to your side is the main thing. And to understand that, you have to understand human psychology when it is mixed with money. Because if you are trading with a virtual account, you would be making profitable trades, say for 70% of time, but when your money is involved, it would be like 10% of time you would be making profit. The rest you would be losing. Why? That's the human psychology of it. So if you are looking at that, that's the reason we showed you that market cycle, different accumulation stages, and rest of it. So if you'd like to get a short idea about that, you can just go into YouTube and type in Mastering the Market Cycle, Howard Marks. In say 20-30 minutes, you can actually get a huge idea from a huge guy like Howard Marks itself. That would be giving you that idea. So that's huge. So guys, hope there's no more questions about the technical or the fundamental side of it. And what I will actually do is I'll actually take out all the links from this description and put in the link of this live. So if you guys actually want to go through that documents individually and read through them, because it has a lot to say. When we started this, I went through this in step by step, giving you guys the idea that where we are headed, right? that global transaction banking, the $1 trillion question. Adam is awake, and I think I have to actually go have my lunch to give my wife a break from him. So guys, I'll meet you on the next video. Bye for now.